University with my boy. Some fake news this week. We saw a couple months ago right here the Brian Ross, what was that Friday that Brian Ross caused the Dow essentially to go down 300, 400 points because of his fake news. Another down day, or the only down day this week essentially, was on more fake news out of the media when, Wednesday, it was reported that Beijing might stop buying our debt. Next day, Beijing comes out and says, we never said anything even close to that. So the market, of course, shrugged that off. So again, folks, you have to take anything you read. I'm not even going to cover the president's comments from yesterday. If he's denying he said that, but of course, Dick Durbin from Illinois, guy who's very, very trustworthy, says he did say those words. I really don't care. The guy is, it's funny how the liberal media is going apeshit over a politician. Well, he's not a politician, but a guy being elected and saying what most people think. I'm not even going to get into it, but again, take everything you read with a grain of salt in this media. It's funny that a lot of members here at TGO say they get their news from me and nowhere else, because I actually go and I know the truth and I know what's going on. But this is more fake news this week caused the market to pull back a little bit, and then we bought everybody bought the dip. I covered yesterday in the primary live trade brief how my spirit animal, Jeffrey Gunlock, and I are parting ways in 2018. He and I both got the election of Trump right and the resulting market rally. He's saying the S&P by the end of next year will have a negative return. He'll say, hey, we'll have a decent run early in 18 and then we'll decline. Couldn't be more wrong. The guy is wrong, and it follows, Let's take a look at this headline. Dow's up another 200 points today. It was up 200 points yesterday. U.S. stocks are on track to set new closing records. This is the best January that I can remember, folks. We had earnings season obviously kick off today. J.P. Morgan, our big J.P. Morgan trade. What did I say yesterday, folks? Another record call. I said, folks, J.P. Morgan's going to get kicked in the gut with earnings. They're going to pull forward a lot of impact from the tax law. Their FIC didn't light the world on fire. I predicted that. They're fixed income, currency, and commodity trading, but it didn't matter. I said it's going to be bad news, and the stock most likely will go up. It will be a buy on the bad. You can watch my replay from yesterday. We're going to have a launch here in a couple weeks when you can become a member here at TGO. We only do this a couple times a year. We open our doors up, so make sure you stay tuned for that. So not only did I say yesterday that J.P. Morgan earnings were going to suck, I also predicted it would be a buying opportunity and the stock would go up. Great call yesterday. So I'm not worried about this at all. Jamie Dimon and the financials are going to blow out 2018. 8 to 10% earnings per share increase to their bottom line just based on this tax reform, the impact of which we haven't even seen yet. That's why I disagree with Jeffrey Gunlock. Once people start getting more money in their paychecks at the end of this month and into February, this thing, where's that money going to go, folks? They're not going to put it in a Folgers can and put it and bury it in their backyard. It's going to be spent. It's going to go into the economy, and we're just going to head higher. Now let's talk about our epic call yesterday. For the past couple weeks, I have said I'm not digging tech, whether it's Facebook and Google really getting hit by Europe to start, policing their content or privacy issues. iPhone, the two largest Apple investors saying iPhones and children are toxic. We're doing bad, which is incredible to hear. And Tim Cook just kind of, since this guy's been skipper, he's not shipping his products on time. So I'm not digging. And the meltdown and Spectre flaws a couple weeks ago. I started souring on tech about a month or two ago, and then recently I really started souring on tech, especially when Zuckerberg, whenever it was, a month ago or something, he said, screw shareholders, screw profitability, I want to do good. Wearing my, flight suit of a former naval aviator, I think, oh, that's great, man. That's pretty American. Being Gordon Gekko, and if I were a shareholder, I would have went apeshit and sued the guy. You have a fiduciary responsibility, Mr. Zuckerberg, to your shareholders to make money for them, not for Facebook users. That's not your job. If you want to do that, take the company private with all the, being one of the world's richest men, and do it. What happened today, folks? So yesterday, in yesterday's live trade brief, I said, dump your Jan 19 and Jan 20 Facebook positions. I'm done. I'm out of it. I'm a little leery on Apple. It remains to be seen. And I said I would put everything in Amazon. Amazon is going to take over the world. What happened? 24 hours later, folks, whoops. Mark Zuckerberg came out today and said, I want to do good, and I'm going to make a lot of changes. And bottom line, the stock's down what? It was down 5% at the open. What's it down now? About 4%. Look at that gap down today. This is yesterday was another career call for me. That's a big deal for me to say I'm done with tech. I'm done with Facebook. Get out of Jan 19 and Jan 20s. Get out of them. I think it's just not good news. Boom. So there's another career call for me. Hopefully I'm getting a lot of nice emails and support. People saying, man, thank God you said that yesterday. 5% down in the stock. Look at some of these. Whoops. Analyst downgrades Facebook stock hours after recommending it. So a bunch of analysts recommended Facebook this morning, and then this guy came out and pulled the rug out from it. So these analysts and these big, the same Wall Street firms that said Hillary's going to win, and if Trump wins, the stock market and the economy is going to implode, they got that wrong. They get this stuff wrong. Do you know how much money these people make a year to be absolutely wrong? And do you know how little it costs to be a member here at TGO to actually get what's right? I predicted Trump. I predicted the rally. I told you to bail out of Facebook yesterday, and then this happened. So, again, folks, in a couple weeks, we're going to do a full throttle launch, and if you're not a TGO member, you want to be. Quick reminder, at 1 o'clock today, we're going to do AR, Accelerated Retirement, and a joint analyze your trade and debrief. So that's at 1 o'clock. But great call yesterday to get out of that. Again, Trump is starting to get credit even from the liberal media for this. For this. Isn't it funny that last year liberals and Democrats said if Trump wins, the stock market and the economy is going to implode, and then with this going on, they said Trump has nothing to do with the markets and the economy. The best part about a double standard or being a hypocrite is you're always on the right side. So I'd rather they just shut up and enjoy the returns. Obviously, he's going to own any pullback, but as I predicted in my 2017 debrief and 2018 brief, the only pullback we're going to see, folks, it ain't going to be economic. Okay, it'll be a North Korea, it'll be a Iran, Saudi Arabia flare-up. It'll be geopolitical. I don't think the Fed. I think earnings are only going to get better through 2018. So I don't see this market pulling back for anything other than a black swan event in 2018. So, this is great. Our ExxonMobil position, whispers of $80 oil are growing. Brent topped, what was it, $70 for the first time in a long time the other day, and our ExxonMobil position is the sales are trimmed for $35 oil. So look at this, ExxonMobil up another percent today to almost $88. We put on a long call diagonal right there on ExxonMobil, and look at this thing. We are up nearly $20,000 in a month and a half of trading ExxonMobil. We did some iron condors, some bull put spreads, bear call spreads, and a long call diagonal. ExxonMobil is printing money for our members here. Short vol, man. The short vol trade in 2017 was the trade to do. One of the least volatile years in the S&P 500. Like I said, we'll see some black swan events, and if there's any known events coming up, we will trade them. Again, the only 2017 meaningful pullbacks were political. Fire and fury, Trump's a racist, Obamacare, failure to repeal Don Jr.'s committed treason, and the Comey memo. That was it. Other than that, folks, this thing's had a rip your face off rally that ain't going to stop. So the low VIX trade, I'm not going to short vol this year because Murphy's Law says I short vol and something bad's going to happen. We will trade vol when we see it. So bank earnings, I also predicted a couple months ago. I said, that the blue bloods will maybe take a little bit of a hit, but after that, it's going to be rip your face off rally. One of the banks that I really haven't liked, especially since it was full of a criminal skipper and 5,000 people that should be in jail, was Wells Fargo. So Wells Fargo actually did pretty damn good today. So a couple months ago I said, I hate saying it, but I did add Wells Fargo to my bronze medalist. I said JP Morgan, Morgan Stanley, and Wells Fargo. Maybe take a look at a Wells Fargo trade, and that was a good call as well. So I know some of my members emailed today and said, hey, I'm in Wells Fargo. A little bit, it's flat. It's funny that Wells Fargo actually had a beat and they go down a little bit. JP Morgan missed huge and they're up a little bit. But look at Wells Fargo is a mom and pop bank, and as more people get more money, they're going to go to Wells Fargo for auto loans, home loans, small business loans. So we'll talk about this at 1 o'clock. I got to get going here. A lot of good stuff going on here at TGO. Hopefully, you can tell I'm very passionate about what we do. We have been right. We've had a great 3 months. I think I have like a 92% success rate, which is blown away. I shoot for at least a 70% win rate, and in the past 3 months, I have a 92% win rate on winning trades. I got blown out of a CSX iron condor. CSX running up in earnings was awkward. They have earnings on the 16th, but I tried to put on an iron condor right here and here. The bull put spread is obviously max profit, but it got blown out of the iron condor that expires today. So that's one of the busted trade in 3 months. Well, a hand 2-3 busted trades in 3 months is that's a career high for me. So things are going good here at TGO. I'll see many of my members today at 1 o'clock for accelerated retirement and analyze your trade. And we're going to talk about another epic win and another great call, GE. Look at GE. We did synthetic stock at the 15 strike right here, just days before GE had this kind of rip your face off rally as well. So great call on GE. We got into it at like 1750 right around here, and it's up at it was up at 1909 yesterday or something like that. So that's a huge percentage gain on GE. And that's going to be a gift that keeps on giving. GE is going to have an epic 2018. All right, guys, I got to run. I'll see many of you at 1 o'clock. Have a great rest of your day. Happy hunting. Make sure you hedge and have a great weekend. Markets closed on Monday for Martin Luther King, and I'll see many of you for a joint brief on Tuesday at 1 o'clock. Weekly options and primary live trade brief. We'll see you.